welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, we are with the 4 hours chart of gold USD in front of us. And as we can clearly see that market is silent. There is silence in the market and market is waiting for FOMC. So my dear friend, today you can expect that hardly there is any opportunity in the market to trade. So if you have any pending work at home, for just like you need to wash your clothes, okay, you need to wash your car, you need to clean your house, then today is the day because market is not going to give you any opportunity. So gold subdued ahead of Fed decision. Gold was subdued around 1980 an ounce on Wednesday, holding near its lowest level in 3 weeks as investors cautiously awaited the US Federal Reserve's interest rate decision. Gold holds tight range as traders strap in for Fed verdict. So you can expect that mostly the market is waiting for the FOMC today. So if you are not sure about the timing, just go to any economic calendar and change the time zone. In my country, FOMC is about to come out around 12:30 a.m. FOMC's timings are horrible for me. Okay, so I hardly trade on FOMC. But in your country, maybe it will be evening or some afternoon, something like that. So it will be beneficial for you. But in India, okay, the timing is pathetic, 12:30 a.m. at night. Anyways, we can expect that before FOMC, market will stay in a tight range. So as a result, you need to be careful. So usually in this type of market condition where we have market structure like this, and when market breaks the previous low, we can go for a sell. For example, if market breaks 1975, we can go for a sell below 1975. But the problem is that we do not have much volume right now. In absence of volume, a breakout or breakdown cannot happen and it may lead to a false breakout. So it's better to just observe the market, and in case during the European session or US session, if you see that market is collapsing, market is going down with a red candle, with proper or strict risk management, you can go for a sell position below 1975. Otherwise, there is no other reliable trading opportunity. Yes, we have a selling opportunity or resistance around 2020 where we have sellers sitting, but I don't think so market have the strength and potential to climb towards 2020. So there is no point of talking or discussing about 2020 as of now. During the day, if you see market is going up or if gold shows some recovery, you can also observe the market around 1987 or around the 50 moving average here. You can see I have changed the time frame and right now I'm in the 1 hour time frame. So on the hourly time frame around 1987, you can observe the market during the Asian session and European session. If market reverses, you can look for a sell. Similarly, we also have another selling opportunity around 1996 to 2000. Why? Because of previous price rejection around the area, and in this market condition where we don't have much volume and volatility, we can expect that market will reverse. After FOMC, market will be volatile. So as a result, try to follow the trend of the market. Do not act over smart. Okay, do not look for reversals. Try to follow the trend of the market. Okay, because trend is very important, and especially after fundamentals, because fundamentals provide direction to the market and you should respect it. If you're wondering about any support or resistance level after FOMC, then sadly we do not have any strong levels that will work at the time of news. We have next support around 1940. Around 1940 we have the next support, but that support is based on FIBO 50% retracement level. And if you're planning to take a buy at the time of FOMC or after FOMC, if you see the market is taking support around 1940, be careful because it's a zone. Keep your stop loss below 1930, huge stop loss, because you can see that though we have FIBO around 1940, we also have some support or price rejection till 1930-32. So as a result, it's a big zone, 1932 to 1940. It's a big zone of 80 pips. So be careful. Okay. And right now, again, I'm repeating, before FOMC, hardly we have any trading opportunity on the side. So if you're a beginner, and you don't want to lose any money right now, you're in a tight spot, then obviously you should avoid the market. You can watch the market, but yes, try to um, do your pending works that you have, like cleaning your house, cleaning your car, because market will not be giving you any good opportunity right now. But if you're madly in love with gold, if you want to trade, then that's your personal choice. But yes, in this type trading in this market is like gambling, so better avoid. And during the day, especially after the European session, or if you see market going below 1975, be careful, because when we do not have much volume, proper volume, enough volume in the market, the breakout may turn into a false breakout. Okay, so if you want to sell, be careful. That's what I'll say. If you see the market is being accompanied by volume, that's a different thing. Otherwise, it's very risky. And in case market shows upside, observe the market around 1985-87 area. We have the 50 moving average as the dynamic resistance. If market reverses, we can go for a sell. And then we have 1996 to 2000. Okay, because of this. And I don't think so in this market condition, market will be able to break 2000 level. And moreover, 2000 is also a round number psychological resistance. So if you combine everything, then high chance that okay, market will face some selling pressure around the area. So if that happens, we can obviously look for a sell position. And you can see that I am not talking about any buys here, because we do not have any proper buying opportunity on the chart of gold right now. Just by observing the present status of the market situation here, if you already have taken a buy, then be on the trade, because we can expect that market will give you around 15 to 20 pips more. And if market breaks the present low here, then please try to avoid buys, because that can be a little bit risky. Okay, so do we have any proper strong resistance or support? Sadly, no. The next support on the chart of gold is around 1940, but that has been derived from FIBO 50% retracement level. So in case after FOMC gold starts dropping, max to max, we can expect that there will be a temporary bounce, not a complete trend reversal. Okay, so as a result, after FOMC, always try to follow the trend of the market. That will be much more important. And please do not try to gamble with your hard-earned money and capital, because FOMC is a little bit critical event. There may be some spikes in the market. For example, if you see the market is going up, and if you see some sort of price rejection, then try to avoid. Okay, try to avoid, because see, market will give you plenty of opportunities to make money. You don't need to gamble at the time of news. The moves that we get at the time of news, okay, they look very nice. We imagine that we can make so much amount of money, but maximum traders lose money at the time of news. That is also a bitter reality. So don't forget that. Bye bye, take care. See you tomorrow.